Good afternoon, welcome to GrainTV. It's July 1st, 2014. I'm Logan Burgess. To my right here is Cody Bills to help break down a negative day once again following the USDA planted acreage report yesterday. Let's take a look here at the quotes and see where we ended the trade session. We had September corn down 2 3/4, new crop corn off 2.5 cents. The move from yesterday was continued in soybeans, off 10 cents for September, down 9 3/4 on November. A relatively quiet day out of the Chicago wheat complex, down just 5 cents there. You know, Cody, on yesterday's show, we really focused on soybeans because that was the big number from the report. The fundamentals in that market seem a little bit more cut and dry than they do on corn right now, and we wanted to take a look at this corn market. Similar situation following yesterday's trade. We had a sharp move lower, but we found a little bit of strength here today.
Yeah, absolutely. And I think, you know, that sharp move lower here, that came, I think that we had old crop stocks come out higher than expected. So that was bearish. But I think the thing that really augmented this is the selling pressure that we saw in soybeans. I think for a large part, a lot of the selling pressure that we saw in corn was spillover from the selling that we saw in soybeans. Now, keep in mind here today that we traded lower here, but we were able to come back. We finished about where we closed. So we had this little bit of a doji. We got a big wick here, and I think that shows perhaps a little bit of strength. And for our bias here at Grain Hedge, I think one of the things that we want to keep in mind here is that, one, we've got decent production coming out, but we still have strong demand. Ethanol numbers continue to be strong. The oil prices out there continue to be very strong, driving that demand at ethanol facilities for corn and stocks to feed their crush. And of course, we also have export sales still running 154 million bushels ahead of pace. Bottom line is we did find stocks in the old crop, but when you look at the fundamentals here, there is demand. And I think there's going to be demand here to be able to kind of put in a floor. I think that big drop that we saw yesterday, I wouldn't be surprised if we kind of hammer out a little bit of a floor here and move sideways. I'm not nearly as bearish corn as I am soybeans.
Yeah, you know, Cody, if you take a look a little bit closer here at that acreage number that we got yesterday from the USDA, you can see this chart here shows that planted acreage by year. So we're coming into a year where we're having quite a bit lower acres than we're used to during the last two production seasons. At the moment right now, expectations are for yield to make up that difference in acreage, but obviously this crop is far from done, still very young, and there are concerns as we enter that July time period into pollination that there could be a weather event there, and it wouldn't be surprising, I guess in my opinion, if the market started to factor a little bit of that in here, specifically after a big sell-off like this.
Absolutely. I mean, let's just take a look at the weather. I mean, we've had incredibly wet spring, especially for that northwestern part of the plains. So the bottom line here is we've had very wet areas. Some areas have really had much more than just excessive moisture. What that means to crops is that they may have very shallow roots. I was talking to some North Dakota producers, and they were saying that their crop roots are very, very shallow. What that means is that down the line, if we don't continue to get this kind of moisture here, they would be susceptible. The crops in those regions are susceptible to dryness later on in the season. One thing that we did get as a takeaway here from the Planalytics web meeting is that not all El Niños are created equal. They are not all the same. Just because you say El Nino does not necessarily mean that the event and the magnitude of that El Nino is just going to bring adequate moisture. If we get a mild El Nino, that opens the door for less than adequate moisture, and that means that those areas in the northwest could potentially suffer some yield drag due to less precipitation later part of the year. So it is not by any means a made crop yet. Everything is going very positive. Everything is very bearish right now. But the truth is that we don't know what sort of weather events lie in front of us, and that if we don't get that moisture, if that heavy moisture doesn't continue here, that leaves the opening here for a little bit of a rally. And I think the demand right now is hammering out a floor, and you have that possibility of a weather event bringing us higher.
Yeah, well, we're going to get some indications of demand here coming down the pipe this week. Tomorrow we do have EIA ethanol numbers out. As you said, Cody, ethanol production has been exceptional here over the last couple weeks. We actually saw record production 2 weeks ago here. So we'll have to see what it looks like tomorrow in the EIA report. Then additionally, we'll be getting the export sales report. Export sales of corn still look pretty darn good. Our models show current export sales booked well ahead of current USDA expectations. We'll have to see what that report delivers on Thursday, and then we will have Friday off for the July 4th holiday. So we have a shortened trade week here, but we have two important demand side reports coming down the pipe. We'll help keep you posted on those here on GrainTV. Thanks a lot for joining us here to break down the market on a Tuesday. We'll see you tomorrow.